This week we continue our look at payroll taxes, but this time we're looking at it from the perspective of the employer themselves and the costs that the employer incurs directly for the other half of a lot of these taxes. So let's look at this example. It says that the total payroll for this commercial cleaning company has employees earning $5,000 for the pay period ending August 14th. Our job is to compute the employer's payroll taxes for this period. And these are, again, a lot of the same payroll taxes we calculated last chapter, but this time, again, it's the other half that's the employer's sole responsibility. So we're looking at 6.2% for the employer's share of Social Security and 1.45% on Medicare, 0.6% as a federal unemployment tax, and 5.4% for state unemployment tax. And it's assuming that all of these earnings are taxable for the employer. So we are given a chart here, and we're going ahead and putting our base amount, since it says that all of the payroll is taxable. We're filling $5,000 as our base for each of these taxes. And then I've simply changed these decimals, change our percentages into a decimal. So for example, to change 6.2% into a decimal, remember you move your decimal place over 2 times. So that would be 0.062 as a decimal. And so I've done that for each of these taxes, and we're simply going to be multiplying the base times the rate in order to get the full tax amount. So if you put these into your calculator, for Social Security, the employer responsibility would be $310. Medicare, the $5,000 times 0.0145, that one would be $72.50. Next up, we'd have our federal unemployment tax. If we multiply those together, our employer responsibility would be $30. And then last one, the state unemployment tax would be, again, just multiplying the two numbers together, $270. If we add all of those up together, it's $682.50. All right, and then the next step is we would put this into a journal entry. And we would simply take all of these and put them into payable accounts. And that's where they're going to be held until they are actually paid out to each entity. And in total, we're going to put them all into an account, the total, into payroll tax expense, the expense account that offsets these. So to put these in our journal on August 14th, we're starting with the payroll tax expense. Like all of our other expenses, it's going to be entered and increased as a debit. And we're going to put the total amount here, $682.50. And then we'll outline each of the payable accounts that these will go in. All right, so each of these have been entered individually as a credit because they are going into liability counts where they will hang out until they are paid to the appropriate entity. And then we'll just match the dollar amounts from above. So Social Security tax payable was $310. The next one was $72.50. Then our federal unemployment was $30. And finally, our state unemployment was $270. All right, and that should balance out our journal entry. So again, the key here to remember is the total went into the expense account, and this is the employer's side. So the total went to the expense, and then each individual item went into a payable account where it will hang out until it is paid as part of the payroll process.